All right, today we're going to tackle something every Canadian founder faces: getting your business the cash it needs to grow. We're going to build the ultimate roadmap to navigate business loans in Canada and turn that confusion into a clear-cut plan.
Yeah, does this feel familiar? I bet it does. Look, it's a feeling almost every entrepreneur has. You've built something incredible, you know you need capital to get to the next level, but the whole process just feels like a giant, dark maze. Well, consider us your guide with a big flashlight.
And this quote just nails it, right? That no from a lender feels like they're judging your baby, everything you've worked for. But here's the thing, and this is so important, it's almost never personal. It's all about data, timing, and finding the right fit. And that's exactly what we're going to break down for you.
Okay, so here's our game plan. Think of this as our roadmap for today. We'll start by exploring the funding maze itself. Then we'll figure out how to choose the right lender. After that, we'll build your application playbook. We'll get real about how long things actually take, understand why lenders say no, and finally, figure out your absolute best next move.
All right, let's dive into Section 1, the funding maze. The thing to remember here is that the goal isn't just to get out of the maze by any means possible.
And this is really the key mindset shift we need to make. You're not just asking for money. You're looking for a partner. The right partner is someone who actually gets your business, gives you terms that work with your cash flow, and is invested in your growth, not just your immediate need for cash.
Okay, so if we're talking about partners, you've got to know who's out there, right? Basically, the lending world is split into 3 big territories, and each one plays by a different set of rules. Understanding this map is half the battle.
This table breaks it all down. It's really the fundamental trade-off of business funding. You've got the big banks, right? They'll give you the best rates, but man, are they slow, and they want to see a perfect track record. Then you have government-backed options like the BDC. They're awesome for big growth projects, but you have to check all their boxes. And finally, the alternative lenders. They are lightning fast and super flexible, but you guessed it, that speed and flexibility comes at a price.
Speaking of that alternative space, let's talk about a big one, the Merchant Cash Advance, or MCA. Now, you really got to get this. An MCA is not a loan. It doesn't have a traditional interest rate. It's basically a purchase of your future sales. They care way more about your daily revenue than your credit score, which can be a total game changer for a lot of businesses.
All right, so you know the landscape. Now it's time to get your own playbook ready. This is all about getting prepared because, trust me, a prepared application is a fast application, period.
You know, the actual steps to apply are pretty much the same everywhere you go. You check if you're eligible, you gather your docs, you apply, you wait for an offer, and you get the funds. But the magic, the thing that makes or breaks your chance of getting funded, it all happens in step 2, getting your documents together.
Okay, screenshot this. Seriously, this is your mission control checklist. I want you to think of this as your loan package. Getting all of this, your ID, your bank statements, everything, scanned and saved in one folder before you even think about applying, it's the single best thing you can do to speed things up. And why is that? Because to a lender, messy paperwork isn't just messy, it's a sign that your business might be messy too.
Okay, let's bust a major myth right now. The whole idea of instant funding. You see it everywhere, right? Funding in 24 hours, but what does that really mean in the real world?
So here's what a fast week actually looks like. You apply on Monday morning, all excited. Tuesday, they ask for another document. You finally get approved on Thursday, and boom, the money hits your account on Friday. And here is the crucial takeaway. Same-day funding almost always means same day after you're approved, not after you apply. That's a big difference.
And when you look at the averages, the difference is just staggering. A big bank? You could be waiting a month, maybe even longer. An alternative lender? You're looking at a few days. And an MCA provider? If you've got your ducks in a row, that can happen in under 48 hours. So you have to ask yourself, what kind of timeline can my business handle right now?
And one more thing, a little detail that trips a lot of people up. Even after you get that "Congratulations, you're approved" email, it's not over. There can be regulatory holds, bank transfer times. These little things can easily add a few more days to the process. Just be aware of them so you're not caught by surprise.
All right, let's talk about the part nobody wants to talk about, rejection. But listen, a no is not the end of the road. In fact, it's valuable information. It's the lender literally telling you what you need to fix to get to a yes next time. For the big banks, a lot of the time, it just boils down to one thing. This number right here. If your credit score is under 680, a lot of their systems will just automatically say no before a human even looks at your amazing business. It's just their filter.
So, what's the fix if your credit score is the problem? First off, pull your credit report. You'd be amazed how many have errors, like 1 in 5. Clean that up. Pay down some debt if you can. But hey, if you need cash now, stop banging your head against the wall with the big banks. Pivot. Look at alternative lenders who are okay with scores down to 550, or an MCA that's looking at your sales, not your history.
Okay, so besides credit score, what else makes lenders nervous? Well, being a new kid on the block, less than 2 years old, that can be a red flag for the traditional guys. Unstable-looking revenue, even if it's just seasonal, they see that as risk. And yeah, we're back to it. Messy, incomplete paperwork. It's just a huge, avoidable problem. But the good news is, for every one of these hurdles, there's a solution. Too new? No problem. Find a lender that specializes in startups. Seasonal revenue? Don't just give them the numbers, give them the story. Show them the data from past years to prove the pattern. And the fix for messy paperwork? You know it. Build that loan package before you start. Okay, we've been through the maze, we've scouted the territory, we've learned how to deal with the roadblocks. So for our last section, let's put it all together and figure out your next move.
So when we boil it all down, your funding roadmap really has 4 key landmarks. 1. Know the players. Understand that trade-off between speed, cost, and how tough their rules are. 2. Preparation is power. A complete application is a fast one. 3. A no is just data. Use it to find a better yes somewhere else. And 4, and this is the big one, you're not just looking for cash, you're looking for the right partner.
And that really brings us to the final question. You've built an incredible business. You've poured your heart and soul into it. So is your funding application ready to match that? Because getting that part right is how you get the fuel you need to really take off. Thanks for joining us.